New Zealand dollar, US dollar daily forecast, November 30th, fxempire.com. The New Zealand dollar rose during the session on Tuesday as traders continue to trade on hopes of a workaround in the EU. The trend is most decidedly bearish overall in this pair, and as a result, we feel that buying it could be risky, even if the short-term action looks bullish. As I switch from a daily to a 4-hour chart, you can see that we are forming a bit of a hammer here, just above this line that signified basically 76 as a support and resistance zone. So it does look like it wants to pop. But in the end, we feel that the 50% retrace is probably going to be the place to look for perhaps some selling, and this would be right around the 78 mark. This low is definitely lower than the previous swing low before it, so by definition you have a downtrend. We can see that even though we did have a nice strong rise during the session on Tuesday, we did give back quite a bit, and we could see wicks, long wicks at the tops of candles as we rise. A classic sign that perhaps the strength just isn't there. Granted, we could fall much before the 50% tile retrace, but a lot of trading is basically down to preserving capital, and we just feel trading against the trend in a massive move down like this just is not a prudent way to trade your account. Being patient and waiting for these setups like this does seem to be the way to go over time, and is quite rewarding when we get those setups. The Kiwi dollar is a very thinly traded market, so it can jump or fall rather rapidly. Plus, we have to keep in mind that there is a gap from the weekend that has not been filled and will certainly be filled sooner or later. Question is when. In the meantime, we don't buy. We're just simply waiting to short this pair once we get to a nice resistance zone and get a weak candle.